If you're holding 14,112 HBAR right now, you're probably asking yourself what that stack could be worth by 2026. Could it turn into a serious payday, or will it just be a solid gain? In this video, we're going to break it all down. We'll look at Hedera's current price and market cap, explain what makes the technology unique, go over its adoption and use cases, and of course, run through price predictions with market cap calculations so you can see what your 14,112 HBAR might realistically be worth in just a couple of months. But before we continue with the video, if you're looking for a reliable place to trade crypto, I recommend BTCC. They've been trusted by millions for over 14 years, and right now you can grab a 10% deposit bonus on your first deposit over 500 USDT, plus unlock secret community rewards and extra bonuses of up to $10,055 per user. On BTCC, you can trade 300-plus crypto futures with up to 500x leverage and even access tokenized stocks and Forex, all with no VPN or KYC required. Use the link in the description to sign up, claim your bonus, and start trading today. At the time of recording, HBAR is trading around 24 cents, with a market capitalization of about $10 billion. That means your 14,112 HBAR is currently worth just under $3,400. That's your starting point today, but the real question is what that same bag could be worth by 2026 if Hedera continues to grow and adoption ramps up. What makes Hedera different from most other cryptocurrencies is its underlying technology. Unlike nearly every other major crypto network, Hedera does not use blockchain. Instead, it's powered by Hashgraph, which is a different kind of distributed ledger technology. Hashgraph offers several advantages over traditional blockchains. It is faster, more scalable, and designed to finalize transactions in seconds at an extremely low cost. While many blockchains measure performance in hundreds of transactions per second, Hedera can process thousands, all while keeping fees under a penny. This gives it a real edge in enterprise and government adoption, where performance and reliability matter most. Another strength is sustainability. Hedera is one of the most energy-efficient networks in crypto. In a world where climate concerns are growing and companies are under pressure to reduce their carbon footprint, Hedera's lightweight consensus is a big advantage. It has even been used to build carbon credit marketplaces, giving companies a way to tokenize and track their emissions. When you combine energy efficiency with low fees and high speed, Hedera becomes a natural choice for enterprises that want to explore distributed ledger technology without the baggage of expensive or wasteful systems. Then, there's governance. Hedera is governed by a council of global corporations rather than anonymous developers or small groups of insiders. Members of the Hedera Governing Council include household names like Google, IBM, Boeing, LG, Dell, and Standard Bank. This governance model means decisions are made with stability and accountability. The council rotates members regularly, ensuring no single company dominates. This structure gives Hedera legitimacy in the eyes of large institutions and governments, because they know it's not controlled by one person or small group. That credibility is one of Hedera's most underrated strengths. Now let's look at adoption. Hedera is already being used in real-world cases. Supply chain companies use it to track and verify authenticity of goods. Avery Dennison has built solutions on Hedera for traceability and product verification. In the financial sector, Hedera is being tested for asset tokenization and even central bank digital currency pilots. These aren't just ideas. They're live experiments and real integrations with serious players. Hedera is also heavily involved in sustainability, being chosen for carbon credit tokenization platforms that allow companies to monitor, trade, and offset their emissions. As the push for greener solutions grows worldwide, these kinds of use cases will become more and more important. The opportunity with tokenization cannot be overstated. Trillions of dollars of value will eventually be tokenized, from real estate to stocks to currencies. That will require infrastructure that is fast, cheap, and scalable. Hedera fits that description almost perfectly. It has the ability to handle the volume and keep costs predictable, which is exactly what enterprises and financial institutions will demand if tokenization is to become mainstream. If Hedera captures even a fraction of this market, it would mean massive demand for HBAR. Now let's break down what your 14,112 HBAR could be worth by 2026 under different scenarios. If HBAR simply grows steadily and hits 50 cents, the market cap would climb to around $21 billion. At that price, your 14,112 HBAR would be worth about $7,056. That's more than double your current value. and it represents the conservative case where adoption continues without explosive growth. In a stronger bullish scenario, Hedera becomes one of the main networks used for tokenization, supply chain tracking, and sustainability solutions. If the price climbs to $1, the market cap would be around $42 billion. At that price, your 14,112 HBAR would be worth about $14,112. That's more than a 4 times return from your current value, and it would position Hedera as one of the leading enterprise-grade projects in crypto. Finally, let's look at the moonshot case. If Hedera cements itself as a backbone for global digital infrastructure, with major corporations, governments, and even central banks relying on it, then the price could climb to $2. That would push the market cap near $84 billion. At that level, your 14,112 HBAR would be worth just over $28,200. That's a huge increase, close to a 10 times gain from today, and while ambitious, it's not out of the question if Hedera continues to execute and adoption accelerates. The range of possible outcomes shows just how much potential HBAR has. Even in the conservative case, your bag doubles. In the bullish case, it quadruples. And in the moonshot case, it grows nearly 10 times. Which one plays out depends entirely on adoption. Hedera already has the technology, the governance, and the efficiency. What it needs now is continued real-world integration at scale. So what could drive HBAR toward those higher levels? The first big catalyst is enterprise adoption. Companies want fast, cheap, and green infrastructure, and Hedera provides that. The more firms that choose Hedera for things like supply chain tracking, digital identity, or tokenization, the more demand there will be for HBAR. Another catalyst is central bank digital currencies. Governments are actively testing digital money systems, and Hedera has already been involved in pilots. If even one major central bank chooses Hedera, it would be a massive boost to credibility and usage. Tokenization is another driver. The financial world is heading toward tokenizing assets, and Hedera's low fees make it an ideal candidate. Add in sustainability, where Hedera is already a leader, and you have multiple narratives that could fuel growth. There are risks as well. Some critics argue Hedera's governance is too centralized, since it relies on big corporations. Others point to competition. Ethereum, Solana, and other networks are also pushing into tokenization and enterprise adoption. Hedera will need to continue innovating to stay ahead. Token supply is another risk. With a total supply of 50 billion HBAR, tokens released into circulation over time could create selling pressure. These are important factors to watch. Even with those risks, Hedera has proven itself resilient. It has weathered bear markets, expanded its governing council, and continued rolling out real-world applications. Unlike many projects that remain purely speculative, Hedera is being used today. That foundation gives it staying power and positions it well to benefit from the next wave of adoption. By 2026, your 14,112 HBAR could realistically be worth anywhere between about $7,000 in the conservative case, $14,000 in the bullish case, and more than $28,000 in the moonshot case. That's the range of possibilities based on real market cap math and adoption trends already underway. The bottom line is this: Hedera doesn't need to dominate the entire crypto space to give you strong returns. Even steady growth could double or triple your stack. But if it does achieve its bigger ambitions and becomes a core piece of global financial infrastructure, the upside is far greater. So what do you think? Will HBAR stop around 50 cents, climb to $1, or push toward $2 by 2026? Drop your prediction in the comments below.